I mean, I think it's very difficult, obviously, to look through any sort of long-term picture at this point when it's all near-term volatility and event risk. I think the sell-off that we saw on Friday was largely on the shock of the announcement, some confusion as to what to price that in. And I think as you see things stabilized for the moment, as you've had the reports running over the weekend about the president potentially being released soon, I think you've stabilized back to kind of levels in equities where you were before. I don't know that it was necessarily a buy or sell moment on that. It just injected a lot more volatility, uncertainty into the next month for those that are trying to handicap how this election is going to turn out.
Richard, in terms of the polling, I've already had one, I presume, Republican-biased email this morning, and that's fair enough. I like getting from both sides as well, saying, do you expect NBC and the Wall Street Journal to show a poll with the president closing the gap or even leading as well? I'm referring to the poll that said that the gap had widened after the debate last week as well. But the fact remains that we potentially could still have split government. Do you think, if Mr. Biden pulls ahead and if he looks like he is potentially gaining those seats he needs to control the Senate as well, is that a good or a bad thing for the market? It means there will be more proaction from the politicians. But again, does one think that's a good or a bad thing?
Well, I think it really depends on the sector that you're looking at. And then, when you add that up, that's going to give you that overall direction. I think one of the issues is you right now, you are seeing fiscal stimulus held hostage to the election. You are very unlikely to see that pass before we come through, which means whoever wins on November 3rd, what you're going to see is, as long as it's a government that comes together in some sort of way to deliver that stimulus, whether it's a blue sweep, whether it's the status quo, and even in the situation where we still have a fairly split government, you're likely to see that pass. It's simply a question as to whether it's slightly smaller during the lame duck session or whether it's a larger bit if the Democrats do have that clean sweep later on. So I think that's one side that gets difficult to factor in, but argues for an overall boost in terms of risk sentiment when you get onto the back of it. Then if you go behind the scenes, then it's a question of a Biden win, potentially beneficial for things like renewables. It could have that hit in terms of healthcare stocks, in terms of elsewhere. So I think it really depends on what you're looking at. I think the other side is, if you look at a Biden victory, it's likely going to do more for global growth than it is to boost the America First side of what's been going on. So that potentially changes what you're looking at in the dollar. And so if you're looking at Biden, it probably helps to accelerate some of the weaker dollar movements that we're starting to see as markets think about shifting into EM stocks and European stocks rather than the overweight in the U.S. that we've seen.